Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It is Friday, the 26th of June. I'm Mark Gardner. If you're watching this live, please go and subscribe at Apple Podcasts, YouTube, or Spotify to get it into your platform and push to you every day. Now, basically, last night, what was the chip makers' joy, I suppose, was the hyperscalers' peril. So, as you can see here in the bottom left-hand side, all the really dark green there, and then towards the middle there as well, where you've got Lam Research and Applied Materials, etc. They, obviously very, very green there, but what it's doing is effectively pushing prices a lot higher for memory for the hyperscalers, essentially. So the likes of Apple and Microsoft have upped prices on things like the Xbox. The Apple announced a bunch of different price lifts on just across the board. Some of them up to $500, and you've got Microsoft looking at Xbox as well. Whereby the prices are lifting from anywhere from 25 to 60%. So while that that memory sector is very it's a very positive thing, and they're making all these massive margins because there's a shortage out there and people will just pay whatever they're going to pay. What that has consequences as well. So, and it's not obviously helping just the broader inflation picture that's out there at the moment that the Fed's worried about. Take obviously food, oil, blah blah blah. Like where you just add this to it, and you can into your consumer electronics, and it's the same sort of it's the same sort of inflationary pressures that that it's the last thing that the Fed needs. KPMG actually, which I'm not normally quoted on this sort of thing, actually now expect 2 rate hikes by the end of the year, and but then you've also got other people turning around and saying the worst of inflation and consumer angst is behind us. GDP was out last night. It was revised sharply higher, which is very rare for a final GDP, to 2.1%. Initial jobless claims fell, but PCE was in line. We're still at 3.4 for core year on year, and that was in line with consensus, but it's ticked up from April's 3.3. I would imagine that the next number is not going to be great either, but, in terms of it's going to be the June quarter, so it'll be in we're going to get like advanced numbers around about this time next month or middle of the month. So yeah, the actual economic numbers are not going to be they're not going to be much fun, particularly if they're on the high side, because we're only just starting to see gas prices come down globally. And there's all sorts of rumors floating around out there at the moment that the US is purposely flooding the market with reserves and to try and hammer the oil price back down and all this sort of things. So there's a lot of drama going on in the White House as well. But we finished with a down week this week. Well, unless you're in the Dow or the Russell, and maybe the Hang Seng and the Nikkei. So, but look, Nikkei's too hard, and the Hang Seng is, it has been a pretty, can be a pretty wild ride sometimes. But ASX only down a little bit. We do, we've obviously been hit by the fact that we've got gold and we've got commodities there this week. I've got to say the medical sector is starting to show some green shoots, and we've had like rallies in the likes of TLX. 40X has actually had a really positive announcement this morning, and they've got a therapeutics or TGA nod, which is a relatively big deal for them. So they're an open recommendation from us here at MPC. We got obviously next week we got 4th of July, which is a massive holiday for the US. It's pretty much the biggest holiday of the year. So the next Friday will be shut. People will be taking. I'd expect pretty light volumes next week as people go and travel and start their summer holidays, etc. As you can sort of see here, commodities just absolutely belted, and energy as well. Look, it's a little bit of strength in the US dollar, but I mean, to be honest, I think it's just hot money coming in and out. We saw this in the precious metals. We saw this in, just about everything basically. But yeah, I would say we're going to start to stabilize and head back high. But the same reason we went to 120 and 5,600 in gold and silver. It's the same reason we're back down here. It's just the futures markets particularly have just become just a joke and a meme stock. So pretty much just whatever you think your normal range is now, just assume that, you've got a bunch of hot money traders flowing in and out of it, and the actual speculative market's notionally bigger than the actual physical market, and it's going to go 20% overextension either way. So instead of you can sit here and blow up about how ridiculous it is, or you can just deal with it or take advantage of it. That is trading and investing, unfortunately. So Independence Day, the holiday is next Friday. US markets will be shut. It's on the actual Saturday. Nothing much in the way of economic numbers there, to be honest. They are going to put out non-farm payrolls on Thursday night. That's pretty surprising. And you've got Nike earnings, which, whether the market cares or not, I think everyone will probably be on holidays. Not much to talk about really this morning. We've got RBA minutes actually next Monday. That might sort of get a bit of key insight to see whether whether this recent return to neutral assumption from the press and the market pundits is justified. It could be a little bit more hawkish potentially, given what Michelle Bullock said, and yesterday's employment number in Australia was absolutely outstanding. I could not have possibly got that more wrong. 40,000 jobs came on. I thought it might be a little bit slower, given the budget and the changes in tax, etc. But clearly not. It can be a volatile number though, so it's worth keeping in mind for the next round of results. So, but I mean that does also mean that the RBA is going to be a little bit hyper vigilant that that doesn't end up transforming into wage cost increases as well. For those of you who enjoy the podcast, go and subscribe to our Bulls versus Bears podcast. We did the mega IPOs over the last couple of weeks. We might have a bit of a talk about the consequences of these chip stocks, and probably go a little bit of a deep dive into these chip stocks and probably what's happening in commodities, and why this gold and silver, why gold and silver and these precious metals have had such a pullback today on the show. But a bit of an all-rounder, a bit of a broad one, I'd say today. No specialist topic, but you can just scan there or go to mpcmarkets.com.au/podcasts. If I don't see you on that, I will see you next Monday. Enjoy your weekend, people, and we will speak again on Monday.